In today's class, we're going to continue on with journal entries and add in some new material, the next step in the accounting cycle on posting these journal entries to accounts. So as usual, let's review the prior homework. If you made any errors, then hopefully you can understand why. If not, you can always contact me and ask. The last assignment was problem 252A. It was on page 134. And here is that problem out of the text. On September 5th, we purchased a truck for cash. So the two accounts, the first account is cash. Cash is an asset account, and it's going down because I'm writing a check. And when an asset account goes down, that's a credit. The other account is either truck or equipment, depending on which one you want to use. In either case, it's an asset account, and it's going up because I'm purchasing a truck or a piece of equipment. And when assets go up, that's a debit. So this is going to be debit equipment, credit cash for $38,900. On September the 8th, I purchased inventory on account being the key. And the first account is inventory. Inventory is an asset account, and I'm purchasing inventory, so I'm getting more of it. So that means it's going up. When an asset account goes up, that's a debit. I'm purchasing it on account. So on account here in this context is going to mean accounts payable. Accounts payable is a liability account. It refers to how much money I owe. Since I have purchased on credit, I am now increasing the amount of money that I owe to someone else. And so I'm going to credit that account for $4,200. So the journal entry looks like this: debit inventory, credit accounts payable. On September 10th, I purchased office supplies on credit. Again, on credit is synonymous with on account. The first account here is supplies or office supplies, either way. And in either case, it's an asset account, and it's going up because I'm purchasing more of it. And so that's going to be a debit. The other account is accounts payable because it's on credit. And accounts payable, again, a liability account, refers to how much money I owe other people. And since I'm increasing that amount, I'm going to have to credit accounts payable. So this is supplies and accounts payable. On September 11th, I rented sound equipment to a traveling stage play for $13,600. If you go back up in the textbook to the beginning of this problem, this is a company that rents and sells sound equipment and lighting for different organizations, different companies, and so forth. So when they're renting sound equipment, they're earning money because that's what their business is set up to do. So that's going to be revenue. And the producer of the play paid, so that's going to be cash. So the first account is cash. Cash is an asset account, and it's going up because I have a customer that's paying me money as the business. And assets increase with a debit. The other account here is revenue, as I mentioned, because they're renting sound equipment, and the problem says that's what this business does to earn money. So when they rent sound equipment, that's the revenue account, and it's going up because they're earning more money. And revenue accounts go up with a credit. So this journal entry is going to be cash revenue. On September the 12th, again, renting sound equipment, so that's more revenue, and lights to a local student organization for $2,400. But this time, the student organization will pay for the services within 30 days. That means they don't pay cash to me today, but they are going to pay later. So the first account here is revenue, again, renting sound equipment and lights. That account is going up. Revenue accounts go up with the credit. The other account here is not cash because the organization is going to pay later. So that's a promise that the student organization will pay us. And so this is accounts receivable. Accounts receivable is an asset account, and it refers to the amount of money that customers like this student organization owe us as the business. And it is going up because we have a customer that has promised to pay us, so that increases the amount of money that customers owe us. Assets go up with the debit, so this is accounts receivable revenue. On September the 18th, we paid employee wages that were earned by the employees during the period. So one account here is cash. We're paying employees. We're writing a check. Cash is an asset account. It's going down. Asset accounts go down with a credit. The other account here is employee expense or wages expense, more commonly called, or you could do salaries expense if you wanted to. It doesn't matter, but I'll just use wages since it says the word wages in the problem. Wages expense refers to the amount of time that I've used of my employee's time, that is. And that amount is increasing because my employees have come in and worked and used more of their time. So expenses are going up here, and expenses go up with a debit. So the journal entry is debit wages expense, credit cash. September the 22nd, I collected the receivable from the September 12th transaction. So if you go back to September 12th, remember that I provided some services, rented some stage equipment and lighting to a student organization. The student organization promised to pay me later, so that created an accounts receivable because they owed me as the business money. So down here in September the 22nd, I'm actually going to collect that money that was owed to me. So the first account is going to be cash. I'm collecting cash. Cash is an asset account. I'm getting more of it. Assets go up with the debit. The other account is accounts receivable because I'm collecting money that was owed to me by a customer, and that's the accounts receivable account. And when I collect money from customers that owe me, that means they don't owe me anymore because they're paying me as the business. And so accounts receivable is going down. Accounts receivable is an asset account. It goes down with the credit. And so it's cash accounts receivable for the 22nd. For the 23rd, I borrowed cash from a bank on a 3-year note payable. So the first account is cash. Cash is going up because I'm getting money put into my bank account as a result of this transaction. Cash is an asset account, and assets go up with a debit. The other account is note payable because it says it in the problem, but I'm also borrowing money from a bank, which is indicative of a note payable. Notes payable is a liability account, and it's going up here because I'm increasing the amount of money that I owe someone when I borrow the money. Liability accounts go up with a credit, so this is debit cash, credit, notes payable. On the 28th, I issued is a fancy word for sold. I issued common stock to new stockholders for $35,000. The first account here is cash. I'm getting cash as the business from stockholders. Cash is going up. Cash is an asset account. Asset accounts go up with a debit. The other account is common stock. That is an equity account. And the common stock account reflects how much stock I have sold or issued to stockholders. And this account balance is going up because I just issued or sold more of it. And so when equity accounts go up, that's a credit. So this is cash common stock. And on the 30th, I paid a dividend to stockholders. The first account is cash. Cash is going down because I'm writing a check. And asset accounts go down with the credit. And cash is an asset account, so I'm going to credit the cash account here. The other account is dividends, and dividends refer to the amount of dividends that I've issued or paid to stockholders. And here I'm paying another dividend, so that account is increasing. Dividends increase with a debit. Remember, dividends is an equity account, but it's a contra equity account, so it goes in the opposite direction of normal equity accounts. So this is going to be a debit to dividends and a credit to cash. Again, if you have any questions about these answers, why your answers were marked as incorrect, please just email me, drop me a line, stop by during office hours. We can set up a Zoom appointment if you'd like, whatever the case may be, so that you can get your questions answered. I'll be happy to try to help. So let's move on to the new stuff today. And in the new stuff, we're going to be in step 3 of the accounting cycle. So we spent quite a bit of time in step 1 on analyzing transactions. That's figuring out which 2 accounts are used in an event for the business, and then figuring out whether those accounts are going up or down. Step 2 is taking that information from step 1 and creating a journal entry from it, figuring out what account needs to be debited and what account needs to be credited. Sometimes there's more than one debit and sometimes there's more than one credit, but in the end, the total dollar debits must equal the total dollar credits. And that's step 2 of the accounting cycle. We're going to move on to step 3 of the accounting cycle today, which is actually posting these journal entries to the ledger and calculating account balances as a result. And so what I'm going to work on today is posting to the ledger and calculating account balances. And so we're going to go back through this problem that we just went over. It's problem 252A, and we're going to find the cash balance at the end of September for this account. Now, I could do it for all the accounts we used. I could do it for accounts payable and accounts receivable and revenue and so forth. But it becomes redundant after doing, one or more accounts. And cash balance, the cash balance is usually the most difficult balance to calculate for students, especially beginners. So if we can do the cash balance accurately, meaning if you can do the cash balance accurately, I'm confident you can do the other accounts as well. So I'm going to focus on the cash balance in this video, and I'm going to ask you to do the cash balance for your homework assignment today. So let's go back through this. Now, I'm going to have to make up a number for the beginning cash balance in this problem. Now, here's a big note for you. You won't have to do this, nor should you do this for the homework. So for you, your beginning cash balance for the homework is going to be 0. But for me, if I have the beginning cash balance of 0, it's not going to make sense, because if you go back through the problems here, if I go back up to the very first problem that I did, and I'm scrolling back up here now, as you can see, the very first problem I did was I purchased a truck for cash. So basically I gave an individual or a dealership $38,900 for a truck. Now, if I don't have any cash, if my beginning cash balance is 0, then this doesn't make any sense. Because how can I have no cash but then spend $38,900, right? It doesn't make any sense. So what I'm going to have to do for this problem for it to make sense is I'm going to have to make up a beginning cash balance for the problem to make sense. This problem was not designed to do a posting and calculation of account balances. It was just designed to practice journal entries. The homework problem you're going to have today, you don't have to worry about this. You can start with a 0 cash balance and everything will work out just fine. But just for purposes of showing you how to calculate balances and to try to make sure that the problem at least makes reasonable sense, I'm going to have to make up a number for the beginning cash balance. Again, you will not have to do this for your homework, nor should you do it for your homework. Your homework beginning balance in the cash account should be 0. So here's what the cash account looks like. You've seen this before in previous videos. Cash is an asset account. That means the balances are over on the debit side. And I've got the 4 main parts of the T account. I've got the beginning balance, the ending balance on the debit side, of course. The money is coming in on the side of the balances, so it's coming in as a debit. And the money is going out on the credit side, or the opposite side of the balances. Okay. So I'm going to assume for this problem that we're going through today that the beginning cash balance is $50,000. Again, that's completely made up. It's not in the problem. You can look all day in the textbook for it. You're not going to find it because I'm making it up. Again, on the homework, you should not do this. You should start with a beginning cash balance of 0. So make sure that you do it like you're supposed to. Don't copy me. I'm going off on a tangent here because of the realism of the problem is affected if I don't have a beginning balance. Your realism will not be affected on your homework. You should have a beginning cash balance of 0. All right, let's go back through the journal entries for 252. I'm not going to walk back through all the explanations again. I just explained it. So if you need to rewind it and listen to the explanations, that's fine. All right, on September 5th, we have a credit to cash for $38,900. So since the cash account is being affected, I'm going to go ahead and create a little table here for my cash account activity. And I'm going to have 2 columns, one for the debit column and one for the credit column, right? Because if I go back here to the cash account, money either comes into the cash account or it goes out of the cash account. So when I'm dealing with the cash account, I'm either going to be debiting the account when money comes in or crediting the account when money goes out. So every transaction that uses cash is either going to have a debit to cash or a credit to cash. And so what I'm going to do is just create a little table here just to keep the debits and credits separate. And I'm just going to copy the number down from the journal entry. So here I have a journal entry where I credit cash for $38,900. I'm just going to take that $38,900 and put it in the credit column. That's all I'm doing here is I'm just tracking the activity journal entry by journal entry. Okay. Now the September 8th journal entry does not have any cash activity. There is no debit to cash. There is no credit to cash. So I'm not going to take that $4,200 and try to put it in the cash account. That would be a mistake. You only put things in the cash account when either cash is debited or cash is credited. In this case, the answer is neither. I'm not debiting cash. I'm not crediting cash. Therefore, I'm not going to touch the cash account. The cash account is simply going to continue to have that credit of $38,900 from the first journal entry. So don't try to shoehorn dollar amounts into the cash account when the cash account is not being used. You only put things in the cash account when the cash account is being used. Now, again, I could set up separate accounts for inventory and accounts payable and put these numbers into those accounts, but I'm not going to do that for this demonstration. I'm just doing cash only. September 10th, I don't use any cash again. Once again, there's no cash being used. There's a debit to supplies and a credit to accounts payable. So again, I'm not going to take this $1,250 and try to shoehorn it somehow into the cash account. No, I leave it out. It's not affecting cash. If I were doing this problem in full, yes, I would go into the supplies account and debit supplies for $1,250. And I would go into the accounts payable account and credit accounts payable for $1,250, of course, because that's what this journal entry says to do. So again, it doesn't affect cash. Now on September 11th, I do debit cash here for $13,600. I had a customer pay me for some work that I did. I think I rented some equipment to them. And so now I am going to put that $13,600, but notice I'm putting it in the debit side of the table. I'm not just listing the dollar amounts one on top of each other because, again, theoretically, a debit means that the account is increasing, meaning money is coming into the cash account. A credit means that the cash account is decreasing, meaning that money is leaving the cash account. So I don't want to just put those numbers all together and mix them up like a big tossed salad, because then I'm not going to know, or I'm going to get confused about which numbers are increasing and which numbers are decreasing. It's much easier here just to keep them separate in a nice little table. So I have a debit here of $13,600. Again, in September 12th, I did work for a customer on account, so cash account is not used. If the cash account is not used, I don't put any numbers into the cash account itself. Okay. On September 18th, I paid my employees $4,750. This is a credit to cash, so I'm going to put that in the credit side of the table. On September 22nd, I collected some money that customers owed me, so I collected on accounts receivable. That's a debit to cash for $2,400, so I'm just going to put that into the debit side of the table. On September 23rd, I borrowed money from a bank, and so I debited cash for $20,000 for that transaction, so I'm just going to put that into the debit side of the table. On September 28th, I sold common stock, or issued common stock, if you will, for $35,000. That's a debit to cash, so I'm just going to put that cash into the table. And finally, on September 30th, I paid dividends of $3,250 cash, so I'm just going to put that credit into the table. So all I did was I went back through each of the transactions, and if there was a debit to cash, I put it on the debit side of this table. You know, if you're doing the homework, you can either use a table, you can use a T account if you want, or you can just, write something down on a sheet of paper and just make two columns and track it, debit and credit, right? It's not, it doesn't really matter how you do it, just so long as you're keeping track of it. So just keep track of the debits for cash and keep them separate from the credits for cash. And then what I'm going to do now is I'm going to total up all the debits and all the credits. And so when I do that on the debit side, I get a total of $71,000 of debits. That would be the $13,600 plus the $2,400 plus the $20,000 plus the $35,000. And then I rinse and repeat on the credit side, and I get total credits of $46,900. I'm going to take these totals and I'm going to put them into the T account now. So remember, I started with $50,000 in my cash account. That was a number I completely made up, right? It's not in the problem. Don't go looking for it. I'm going to take those $71,000 of debits and just put them into the cash T account. I'm going to take the $46,900 of credits and put those into the cash T account. And then I'm going to calculate the ending balance in cash, right? So I start with the beginning balance of $50,000. I would add the money coming in, which is the debits of $71,000. So $50,000 plus $71,000 is $121,000. And then I'm going to subtract the money going out of the account, which is the $46,900 of credits. And that's going to give me an ending balance of $74,100 in the cash account. So again, I take the beginning balance, I add all the money coming in, which I got from keeping track of the debits to the cash account, going back through the journal entries, and anytime there was a debit to cash, just writing it down, and then subtracting all the money going out of the account, which was a total of $46,900, which was the sum of the numbers in the credit column. And those numbers in the credit column were generated by me going back through the journal entries, and anytime I credited cash, just writing it down. And then I did the math, 50 plus 71 minus 46.9, and that gave me 74,100, which I would report as my ending balance for cash for the month of September for this problem. All right, so for your assignment today, I want you to go through problem 253B, which is on page 138. You're going to prepare the journal entries as normal in a PDF file as normal, but then you're going to go back through the journal entries and you're going to calculate the balance in the cash account like I showed you just now, like I demonstrated for you with this problem. I want to know the ending balance in the cash account. Now again, you're not going to make up a beginning balance for your cash account. Your beginning balance for your cash account is going to be 0. So you're going to have a beginning balance of 0 for your cash account. And then you're going to go back through your journal entries after you do them, because you do the journal entries first. And then you're going to go back through. You're going to find all the journal entries where you debited cash, and you're going to put those numbers into a debit column. You're going to go back through the journal entries again and find all the journal entries where you credited cash. You're going to put those in the credit column. Then you're going to total both columns up. And in your T account, you're going to start with a beginning balance of 0. You're going to debit the total from the debit column. You're going to credit the total from the credit column. And then you're going to calculate the ending balance in that cash account. So what I'd like you to submit to Blackboard for this assignment is you're going to submit the journal entries, and at the bottom of those journal entries, you're just going to add a line that says cash ending balance equals. In other words, you don't have to send me a picture of the T account itself. The T account is for your learning, so just by hand draw it out on a sheet of paper and calculate it out. But I don't need to see that. Just send me the ending balance in the cash account for this problem. So you're going to submit a PDF file through Blackboard just like you've been doing. You're going to have all the journal entries just like you've been doing. And then below the journal entries, you're going to, return down a line or two, and you're going to literally write cash EB equals. Cash ending balance equals, just like I have it right here. Cash EB equals, and you're just going to put the ending balance of the cash in there. Okay? Don't submit two separate files. Okay? Just put both of these pieces into a single PDF file. So the journal entries in a Word document, and then after the last journal entry, return down a line or two, put cash EB equals in there, then save this as a single PDF file and upload that single PDF file to Blackboard. All right, as usual, let me know if you have any questions.